Well, for more, Rob Hay from Collins Street Asset Management joins us live via Skype from Melbourne. Rob, welcome to the program. Are we being too obvious when we talk about those retailers that are selling goods that we can consume in our homes? Where else could we look?
Well, good morning, Nadine. Good morning, David. Absolutely, there are opportunities for astute investors prepared to look under a few more rocks. One area in particular that we've found of interest is in the serviced office space. One stock that we've recently taken a position in, which got hit particularly hard in the early stages of the COVID sell-off, is Victory Offices. Their ticker code is VOL, and they provide serviced offices all around Australia. What makes them attractive to us is that whilst a lot of us like the idea of working from home, and there's some really good research recently from Dexus which showed that 80% of employees like the idea of being able to have that flexibility, the office isn't dead. And moving forward, as we eventually progress through the various stages of lockdown and life gets back to normal, there will be a trade-off and a lot more flexibility in the workplace. And so for those particular companies in the mid space, particularly in the professional services area, there's a fantastic opportunity for them to rethink their cost line, rethink the way they use their office premises, and adopt and adapt serviced offices so that perhaps if they're only having 60% or 70% of their employees in on any one day, they can take advantage of the professional offices, the space that they do have, in a way which reduces their overall rent cost. Alongside that, Nadine, there's also the opportunity in the short term for those companies who are looking for a way to bring their essential employees back into an office type environment, but without taking any long-term commitments on, and in a way which is mindful of social distancing that we have to go through as well. And so for a company which had well over 80% occupancy leading into the COVID sell-off, having come down to a good 20% thereafter, there's a lot of new inquiry coming through and a fairly attractively priced opportunity for investors.
Okay, can you just repeat the company name for us, please?
Nadine, that one was Victory Offices, and
Victory
the ticker
Offices.
code is VOL.
Okay, all right, haven't heard of that one.
Rob, might get your thoughts on the broader retail sector and also the flow-on effects to the retail REITs. We've seen quite a few impressive results recently when it comes from retailers, particularly those who have been in the online space. What do you make of it?
One has to always step back and go, what is the fundamental purpose of property? And property is really a way of bringing people together for some particular purpose. And when we have a think about what that means in the retail space, we have to give thought to what that purpose actually is and if that is something which is going to stay static or change over time. We believe that the retail sector is going to go through a fundamental change where people who are used to going and doing shopping, for example, in the retail centres, are becoming a lot more savvy and sophisticated with the way that they purchase online. Also, the way that many of us do our banking, another traditional reason for going into a shopping centre and doing some purchases and buying around that, is also changing with a lot more shift towards online banking as well. So we would see that the retail space, particularly in property, is going to be challenged moving forward. We've also seen some friction between tenant and landlord, and that's something which we would expect to see continue, particularly toward the back end of the year when the mandatory code comes off and landlords and tenants potentially have to renegotiate rent waivers, rent deferrals and the like in order to adapt to the new normal.
All right, and then is there any flow through from that to the residential property space in your view?
I think that a lot of the issues confronting residential and retail will be similar, but I don't think one necessarily leads through to the other. If we have a think about the REIT space, the REITs are were very well placed coming into this crisis in that their debt levels were around the 30 to 35% mark, which was a lot lower than what we saw coming into the GFC by way of example. If we compare that to the Australian consumer, which is quite indebted, that will have a more disproportionate effect as home loan deferrals and capitalisation of payments ends toward the back end of the year. We also have an issue where tenants as well will be in a position where they may have to make good rent that was foregone throughout the 6-month period leading into this. And so that again will create some conflict and some tension we expect as well. Naturally, that doesn't bode well for property prices, and we do see that as being a risk over the foreseeable future.
All right, Rob, we will be speaking property a little bit later in the piece, but if you wanted to maybe play that theme in some way, shape, or form. Are there any companies that you look at in your value fund when it comes to the property space?
Where we see value in property is in pure play exposures. So one example of that was the serviced offices through Victory, which has the ability to be flexible in that regard. But we also like those who have exposure to distribution centres and the last mile. So when you and I are doing our online shopping and we're having things that we're expecting to receive in the post or to be delivered to our door, who are the parties responsible for that? Where do they fundamentally go, and how can you get the purest exposure to that? Because if we take the premise that retail shopping centres will be impacted by a reduced amount of foot traffic and a reduced amount of demand moving forward, then it logically flows that online retail will be the place that people tend to push toward, and those property exposures which have pure play abilities to demonstrate that will be where the opportunity lies.
Rob Hay from Collins Street Asset Management, thanks for joining us once again on Ausbiz. Enjoy the rest of your day and we'll speak again soon.
You too. Have a great one. Thanks.
See you, Rob.